Yo, let me start over from the beginning, man. I know earlier I was kind of like trying to make a video of what I do and how I do it. So to make things make a little bit more sense from earlier, I know the video that you was looking at was kind of blurry, man. So pardon me for that. But I'm trying to make my cursor come up. Hold on. There we go. There's my cursor, man. So as you see, man, I got my shit set up pretty good. Well, I ain't gonna say pretty good, but good enough to where I want it. Ignore these lines. I'm gonna delete the lines and I'm gonna start over from the beginning. So first thing first, learning how to get into an entry, bro. Like learning how to get into a trade. So as you see, man, it's on a downward trend. I do not just put a trade in. Even though it's going down, I wouldn't be like, oh, let me just settle it because it's going down. I'm not gonna do that because it's got to give you an indication. What you're doing is putting your trade in based off prediction on what the market is doing. You know what I'm saying? So with that being said, I'm gonna choose my first demonstration. Now you just letting you know it's going down. How do I come up with entry points? All right, I'm gonna use the cursor. Now I'm finna use the cursor, right? And then I'm gonna maybe use some lines and I'm gonna use box. So I start right at the 9 a.m. right here, right? Looking at the 9 a.m., we call these FVGs, right? Fair value gaps. You see the line, the wick on top coming down, and then you got this space right here, and then you got the wick on the top going up, right? So this is called a fair value gap. So what you do when in that situation, you would create a box. So as you create your box, which is right here, and the way you measure your box, you go off the bottom of this wick and the top of the third wick, which is right here. Hold on. Which is right here. Hey, so man, don't forget, man, I'm still learning in this game myself. So I'm not a professor or expert or guru. I'm just a student, to be honest with you. So as you see, I'm trying to dummy proof it to the fullest. You got the wick going downward, and you got the third candle wick going upward. That's how you create your fair value gap. I call it FVGs. This is probably like one of the methods I use. There's others, several methods, man. But this what's working for me. I kind of like it, and I kind of like mastered it in a way. But there are several different ways to trade, bro. Several different ways to put your entries in. So based off this, right, I look at this as a starting point. I still don't place my trade until I read what is going on. So as you see, after this candle formed and it created the fair value gap, you looked at it. This is the candle you pay attention to. Where it's going? It's going back up, right? Now, the moment it enters the FVG, fair value gap, that's when you start paying attention, like what's going on, what's going on. So I got a 15-minute timer, time frame or whatever. I'm looking at this candle, and then I'm seeing what it's doing, right? I might not even put my trade in. I might still just let it play out. Me personally. It's a 15-minute candle, man. I mean, it's a 15-minute trading session. So I don't know. I'll probably just let it play out. But honestly, in actuality, if you already been paying attention to this much of it, you're able to still look and see what you need to do and how you can do it. So when this candle goes in the box, you wait for the next candle to either come out, like it'll touch the box, and then you gotta let it retest. You know what I'm saying, to see what it's gonna do. So what it did, it kept going. It retests. This second candle kind of give you confirmation it's gonna keep going, right? After it came in the box, second candle gave you confirmation it's gonna keep going. So honestly, you could have put your trade in right here as you see my cursor right here, you could have put your trade in buying, right? But you got to check like, okay, where is my stopping point? You see that first line right here with the dots, the lower high? That's my stopping point. But also you can you can look at the fair value gap as a stopping point. That is the I think it's called resistance. I could be wrong, man. I'm just a student. It can be resistance because you have that above your head, right? So you now you looking for this candle to either pierce through the box or continue to go down. But you got to realize it's inside this box. So anytime you see this is inside the box, you can expect consolidation or you can expect a breakout. So in this case, it touched the top of the box, didn't pierce through, came right back down, and it kind of like played in the box a little bit. And then you got your second indication. Okay, it is piercing out the box. Solid candle have formed. Your second candle piercing out the box. Now you waiting for the third candle to see what it's gonna do. Your third candle did not come out the box. It didn't, you know what I'm saying? It didn't do anything. So now you know, okay, this candle is not coming out the box. So I'm not even finna trade. If it was already out the box, like if the second candle was like right here forming out the box, I would have took that trade because I would expect, oh, it's finna go down. So it didn't do that. It went up, consolidation, and it's consolidating. And now you're looking at this right here, right? Guess what? Out the box. And then you got these little small little candles. They call them dojis, right? Out the box, out the box. Now you looking at these dojis, you got to see what this doji gonna do. I don't trade off dojis because you don't know what way it's going. So as you see, went back in the box, got your retest. It went in the box. Your third candle, it's out the box. You know what I'm saying? Like you gotta wait. We gotta wait. So now it's out the box, and also you see that it's red, right? You see that it's red, so that automatically tell you that the trend is going down based off the color. But if you didn't have the colors, you probably wouldn't know, honestly. But as you see, man, my cursor, the cursor's giving me, okay, boom. All right, now I got the solid candle out the box. That's my first candle. You couldn't count this one because it kind of stayed in the box. So it out the box. Then this one out the box. And your third one, okay, boom. Now you out the box. That's your entry. Your third candle, usually your third candle gonna tell you where you can go. That's kind of how I play it now. I'm trying to keep it simple. So that would have let me know, oh, it's finna go down. Guess where my line would have stopped? My first take profit would have been like right here. That's our GP. I'd have been cool with that, bro. So from here, and I'm being honest, from here, you got 502 down here, bro. That's like 90 almost, 90 ticks, bro. It's either ticks or pips, whatever you're doing. So you could have made some bread if you had your shit set to $1, bro, or 10 cents. You'd have made some bread off 90 ticks, bro. But guess what? It kept going. So I would have looked at that. Boom. That's my first take profit again. I would have looked at the next level, like what it's doing, what it's doing. I would have gave it a shot based off that. I would have see, oh, do I have any FVGs here? Don't have any FVGs here. I would have looked at that shit, bro. I probably would have took another trade. But I would have gave it like, once it passed this though, this would have been my next line. It's another indication or entry. I would have used this line as the lower low. I'd have been like, all right, out the box. And going back in the box, I would have been respecting it. It's back in the box. Well, not even say box, but line. So looking at this, boom. I was like, all right, it's out the box. And I would have seen that shit forming. I would have got in like right here, bro. I ain't gonna even hold you. Then I would have rolled this shit out. Bro. I would have never got back in. I would have rolled it out. This would have been my new take profit line right here. Well, at the time, you don't even fucking know. So I'm not gonna even tell you that. Can't say that would have been your new take profit because you really don't know. Because you ain't got that yet. This would have been my new take profit line. But I don't never be dead on the line, just being honest with you. I always go back to these old lines, bro. Because they going to tell you something. So right here would have been my new take profit. I would have looked at the closest one. The closest one to the bottom, which is this one. Which is this one right here. Hold on. I would have went with that, bro. That'd have been my new TP. Easy, man. Easy, man. Easy money. So that's how I do my entries, bro. That's how I do my entries. Now, this ain't even really clean. You know what I mean? This, if you could trade like this, you pretty good. Because it's short wins. Now, you got some shit. Now, this 15 minutes, too. Show you what that owl look like. That owl stupid. Oh, you'd ate real good on that owl. Doing the exact same shit, bro. The exact same setup. You see these, boy, you get in here, boy, you gonna eat. That's why trading on the hourly really good, because it show you more. Even with the 4 hour, it show you more. And it look like it's short, but man, it ain't short at all, bro. It ain't short at all. You this right here. Without that, drop my fair value, got boom. I've been like trying to see something clean come out of that, right? The moment I would have seen this one right here, I'm gonna show my question. The moment I would have seen this, I would have measured it like this, boom. Waited, seen that right there. Okay, it's still in there. I'm waiting for it to go back up. It ain't going back up. It went up, boom. Then it retest. And that third one, you got to see what it gonna do. You see that third one forming? Oh, the market changed. I ain't gonna lie to you, I probably waited out because it's too close to the box. I ain't gonna even put one in right here. But I would have probably waited till it got to the box again to see what we're gonna do. Then that second counter, let me know if it's stay in here. I would have got in right here, bro. That's just me. That's just me. And I would have ate. You got to realize, so you looking at from here, bro. From here, it's 500, right? I would have done that shit at least to the end of the box. Or this first higher low. So you went from 500. Let's say 515, right? 515 all the way to 475, bro. That's over 110, bro. 110 ticks. You would have ate so good off that alone, bro. You'd ate real good. And it'd have been slow money, but you'd have ate. Imagine you got $1 on each one. You would have ate. That's $100 a night. I ain't no telling, man. It probably took you an hour to get that 100, but at the same time, probably took you less than that. Because you got to realize each candle is at a 4 hour. It would took you 4 hours to get that. So the money would probably been more than that, to be honest with you. I'm just giving you an example, man. But that's it, brother.